For Morningstar, I'm Christian Charret. Investment funds in Canada that focus on domestic equities and the specific sectors that make up the bulk of the Canadian stock market gave pretty decent performance in the month of August. I'm here with Morningstar fund analyst Vishal Mansukhani to talk about these results. Now, the best performing fund index for the month of August, for the second month in a row actually, was precious metals equity. Now, this is a category that had a very rough start to the year, losing about 46% in the first 6 months. But in July and August, it's been coming back. In July, the return was about 9.6%, and it just had another strong performance with 12.1% in August. Now, obviously, this is being driven by the price of gold.
Absolutely. So the lower price of gold boosted demand for jewelry, coins, and bars, especially from Asia. According to the World Gold Council, gold jewelry demand was up 37% through the second quarter, and this helped it reach the highest level since the third quarter of 2008. This jewelry demand was driven by China and India, where the growth in China was 54% year over year, and in India it was 51% year over year.
Mm-hmm. Now, another sector-specific category that did well last month was natural resources equity, another category that had a hard time earlier this year. It gained another 3.7% for the month. Now, that's driven mainly by the price of oil.
Of course, yeah. So oil is an asset class that is very, very sensitive to geopolitical happenings around the world. And the concern over Western involvement in Syria drove the prices up. Now, although Syria is not a major producer or exporter of oil, there is concern that the violence might spill over to other major oil exporters and also might impact the transport routes for oil.
Mm-hmm. So all this driving up the price of oil, and of course that's good for the oil companies based in Canada. Now, the energy sector and materials sector, which includes gold, those are big components of the Canadian stock market, as are financials. Financial services also did well, up 1.6%. Now, unfortunately, the foreign equity funds didn't do so well. We saw market losses pretty much everywhere in the world. The United States was down about, the S&P 500 down about 3%, lots of other markets in Europe and Asia. But the currency effects tempered those losses. So we saw mostly flat returns for most of the indices like global equity, international equity, European equity. Unfortunately, one index that went down significantly was emerging markets equity.
Despite the long-term growth potential of emerging markets, which is tremendous, the downside is that emerging markets are very, very sensitive to flows from the developed world. Now, concerns were high in August that the Federal Reserve was going to pare down the stimulus, and this caused the U.S. investors to pull out billions of dollars from emerging markets, and that really caused currencies all the way from India to Indonesia to tumble.
Now, one market that actually did very well in the month of August was Chinese equities. The Greater China Equity Fund category was up 4.1%, second best performer for the month. And that's all really coming from mainland China because Hong Kong and Taiwan, the markets were both down in August.
A lot of economic releases coming out from China indicate that the economy is picking up and the Chinese authorities estimate that the GDP growth is going to be 7.5% for the year of 2013. And Goldman Sachs recently revised its growth forecast for China from 7.4% to 7.6%. And also Credit Suisse, JP Morgan, economists from those companies have also revised their growth forecast for China upwards. And a lot of this performance in China is also driven by the financial services and commodity sectors.
Interesting. Thank you very much, Vishal. And for more on Morningstar's survey of fund performance for the month of August, including a full table of all index performance, please click on the link right below the video player.